Hello and welcome everybody. My name is Christophe de Boek. Some of you know me, for some this is a first introduction, but I want to thank you for joining us on time. As we have not all attendees already in the webinar, I suggest to wait another 2 minutes before we kick off with this webinar. So 2 minutes more patience and then we'll kick off. Thank you. Yes, welcome back everybody. Let's kick off this first webinar of the Intrum Academy. So my name is Christophe de Boek, Sales and Marketing Director within Intrum Belgium. I want to thank you all for taking the time for being with us today. It's a great honor. And I will start with sharing some practicalities around this webinar. Every attendee is muted as we are with a lot of people in the webinar. There's also no webcam function for the attendees. Just the presenters will be sharing their webcam. The good news is that you will be able to send your questions through the chat underneath the screen. We have several people available for you to answer your questions. So they will answer directly. Some of the questions will also be tackled during the live webinar, and other questions will be answered individually after the webinar. We will also send you the presentation and the eCPR survey after this webinar so that you have all the information we want to share with you today. Finally, unfortunately, Nicolas Bernus, our operations director, is due to personal reasons unavailable to attend this webinar, but we have a mighty replacement for him in the person of David Parmentier, our manager business analytics. So normally we would have the Hero Day today. The Hero Day was planned the 12th of March, then rescheduled for the 2nd of July. Unfortunately, we're not able to hold this physical event, but we wanted to give you something, and therefore we started this concept of the Intrum Academy. There will be a series of webinars where we wanted to touch upon different topics within credit management. And hopefully we can finalize this Intrum Academy with a graduation day in the form of a physical event later this year. Let's kick off with this first question. What will be the new normal? Thanks a lot for your answers. Here you can see the findings. So you see it's a mix. It's clear that we are in doubt. We are still not certain of what will this new normal be. Will it be rather normal or rather new? We at Intrum, we have the same feeling. We want to combine the best of both worlds, the pre-corona and the after-corona world. But we are not sure yet what will work the best. So it will be a search with trial and error. Some things will work, others will be very difficult. What we know for certain is that it's our ability to adapt that will decide whether we are successful in this transition or not. If we look at the challenges and the transformations within the credit management after COVID-19, we got a lot of different answers, especially the one in the middle, the none, I find very interesting. But mainly we see two different answers. One is about the maximization of the collections whilst keeping the customer and retaining the customer retention. And the second one is more about the digitization of the collections and credit collection performance. What we see within Intrum and what we saw during COVID-19 is that indeed those two elements will be crucial to adapt the collections process after COVID-19 times. I also want to share with you some of the answers. So you see here chasing the customer without killing the customer, because we want to keep this customer. Focus on cash is king, financial solvability. These are answers that were given by you and for which I want to thank you a lot. Now I will give the word to my colleague Davy Parmentier, who will guide you through the trends in credit management during COVID-19.
Thanks, Christophe. Welcome all. I'm Davy. I will tell more about our COVID-19 trends. The focus of this session will be on three parts. First of all, the impact on payment behavior. Secondly, our action plan to handle it. And thirdly, the first results of our improved digitalization. Let's start with a poll on payment behavior. The question is, how has the payment behavior of your customers evolved during the pandemic? The four possible answers are it has deteriorated, it has improved, it has remained the same, or the fourth one, I have no idea. My colleague Nicola will moderate this poll, and in a few seconds we will see the results. So the poll is now open, and you have a few seconds remaining 5 seconds, and then the poll will be closed. Okay, the poll will now be closed, and okay, we see a mixed answer. Mostly two of the answers are are most common, and it has deteriorated, and it has remained the same. It's almost a 50-50 answer we had. This brings us to the behavior we saw in the customer on the customer side, and these are yeah, in line with 50% of the answers we get at our side, and we saw yeah, and we saw that the behavior deteriorated in April and May, but we see a timing difference between consumers and business and companies. For consumers, the impact was immediately tangible. The impact on the company's payment behavior was with a delay, but more tangible due to dried up income streams. In May, we saw no improvement on companies' behavior. After the panic reaction of consumers, we detect a normal distraction in May. So we saw a little increase, but not yet at the old level for consumers, and for companies. It's from May staying at the lower part of a lower result. But it's too soon to make final conclusions because of the uncertainty of the evolution of the virus, the measures, bankruptcies, and employment. Next to the impact on collections, we detected the first signs of decreased reactions in the beginning of March, when the first plan for social and economic protection was announced. From the start of the lockdown in the third week, we had the biggest drop in reactions. And that's what you can see on the graph, that the incoming reactions dropped first, but very soon after that, you see also an enormous drop in collections. Later on, I will tell a little bit more about the impact of the percentage on the collections and the reactions. All the red lights went on. For example, 3 KPIs of our contact center and performance. For contact center, we saw a decrease of 30% reactions. Secondly, an increase of handling time with about 15%, or 51 seconds more for each call. Thirdly, 50% more inbound calls during peak hours, shifting from 2 hours in the morning and 1 in the afternoon to almost the whole day from 9:30 to 15:30. So we had increased pressure on our service levels. For performance, we saw a decrease of about 20% in collections. Secondly, no differences in the conversion of a contact into a promise to pay, but decreases of 10% in the conversion to payment. This decrease on collections performance and service levels resulted in an increased cost of collections. And as you know, that's a bad cocktail. Let us zoom in to the reasons of contact center KPIs. Next to the changed consumer behavior, there was also the average delay of 5 working days in postal delivery. The handling time increased due to the uncertainty of the customers, but also our employees have more difficulties with the situation. The extended peak hours are caused by more people at home and faster reactions on email. We react on this situation with several actions. We launched an ethical guideline to care for the customer. For example, allowing a delay on new existing payment agreements. For our employees, we had a daily individual touchpoints, regular updates from the management, weekly team meetings on Skype, and also not to forget fun activities on workplace, like yoga, quiz, dance moves, also from the management team. So that was gorgeous. The three next actions will be handled in the next slides. We already informed about our ethical code for installments. We give a delay on new and existing plans. On the other hand, we informed the customer faster and digital about running payment plan. We start our default process 10 days after the installment date. From now on, we send also a follow-up email or a text message one day after the installment date. This resulted in an increase of conversion from 50 to 70%. So 20% points less payment plans going to our default process. Next to that, the table on the left side gives the success rate per installment amount. It feels logic that the success rate decreases with increasing installment amount, but above 40 euro to 250, the success rate is almost flat. So it's not, the feeling is not always the same like the reality. So there's a tipping point on an amount of 40 euros. Concerning the higher handling time and pressure on service level, it's important to increase our self-service. We have two channels, the IVR of interactive voice response and customer web. We handle around 25% of the inbound contacts with the IVR 2.0 self-service we embedded in June. The biggest changes are now that we have a phone number recognition, also a self-service for customers with more than one case, arrange payment plan and text message confirmation. And the last one, if there is an open correspondence, informing that we will handle the correspondence ASAP, and also informing about the self-service possibility on customer web. So this increase was very huge, from about 7% to around 25% self-service. The delay in reactions and collections inspired us to redesign our action networks. We extended the time between two actions, and this decreased the number of needless next actions and gives us the opportunity to do more about to do more outbound and digital campaigns. It leads to faster collections, same level of contacts, less letters, and more digital actions. You can see these results also. Yeah, I think it's clear in the graphs. The right one graph, you see the same level of contacts. You see also a decrease of printed reminders and an increase of digital reminders. And this gives us a better success rate on 30 days. So yeah, the COVID action plan we did had a positive effect on the total result. The conclusion is that uncertainty forces us to prepare our financial customer care. This kind of impact was not seen since World War II, and also our own European consumer payment report shows us this evolution. And here you can also see the quote of Christophe, one of the conclusions of our European consumer payment report. Hereby, I give the word back to Christophe.
Thank you very much, Davy, for this crystal clear presentation and message. I will take over the screen so that I can present the findings of our ECPR. Yes. So maybe before we begin, we've noted, dear attendees, that we've not received any questions so far. So I invite you to send the questions you have through the chat, so we can enhance the interactivity of this webinar. For us, it's also a first, so it's all new, but we want to invite you to interact with us. So thanks for that. Now, if we look at this ECPR 2020 survey we did, we wanted to see how COVID-19 has impacted consumer finances across Europe. There are some key findings, but before I share these with you, I want to do another poll. And the question is as follows: a global health and economical crisis as caused by COVID-19 increases financial polarization in society. So Nicola will open this poll for you, and you can give your answers, which I'm very curious about. So let's say another 10 seconds to give your answer. I already have a sneak preview on the answer. Okay, we'll close the vote and show the results. There you go. I have to say I'm not surprised about the respondings. Our survey indicates the same, mainly that the people that are in a weaker financial position are hurt more than people in a stronger financial position. We see that in the key findings. We see that 40 to 60% of the respondents are quite pessimistic about this period ahead. On the other hand, we have 1 in 3 who say that they have had a positive effect on their financial spending. So let's have a deep dive into these numbers. First of all, the financial well-being. There you see that 1 out of 2 Europeans say their financial well-being has declined. What we see is that Belgium is around the European average, but on the right side of the graph, you see that the Nordic countries have a better score when it comes to the financial well-being. I think this won't be a surprise for neither of us. Secondly, and this is quite surprising, we see that less than a quarter expect their well-being to have improved in 6 months' time. But we see that as Belgians, we are more pessimistic than the European average, and we see the same for Germans. We could say we are more conservative as a country, but there we have, you see also the Italians, which were struck by Corona quite hard on the extreme right of this graph. When it comes to decrease in household income, Belgium is exact on the European average. We see that 4 in 10 have had their employment affected by COVID-19. This is the result, of course, of the technically unemployment measures taken by the Belgian government. Then again, we see most of Nordic countries being far right at this graph. Another question we asked was the satisfaction with the ability to save each month. It's a question we ask each year. What we see now is that there's an increase of 10% of respondents that are dissatisfied with the amount they are able to save each month. Yeah? And this is both in households with children as households without children. Here we see that 39% save significantly less for the future than they were before COVID-19. And we see that Belgium again ranks among the European average. And here, of course, we have this conclusion that 1 in 3 have increased their short-term saving by reducing their financial spending. And there we see that Belgium ranks quite higher than the European average. And we see countries like France, Ireland, also in the top 3. According to us, we believe that this has to do with the burgundish lifestyle of Belgians and the direct impact of the closures of restaurants and bars, which helped us save more. So, conclusions. We see that COVID-19 will have a lasting impact on how private finances will be managed. And we see definitely that financially weaker people are hit more than financially stronger people. So this survey agrees with your answers in the poll question. So I'm glad to see that. So now it's time for our guest speaker. We have Professor Reinhard Steenhout. I will let him introduce himself, but he's a professor at the Ghent University in Consumer and Banking Law. Will speak about the recovery of consumer debts, existing and future legal framework. As you know, there's a lot of change coming up within the legal framework of collection. So, Professor Steenhout, I give the screen to you. And I'll mute myself and click also off my webcam.
Okay, thank you very much. Good morning, ladies and gentlemen. First of all, I would like to thank the organizers of this webinar for inviting me to talk about the legal framework of the amicable recovery of consumer debts. More specifically, during my presentation, I will briefly discuss the existing legal framework, which you are all familiar with, as well as the possible future legislation, which is being debated now for months within the Belgian Parliament. In my presentation, I will not focus on any specific COVID-19 related rules or proposals, because there is more in this world than COVID-19. Today, entities recovering amicably consumer debts have to take into account several rules that are incorporated in the Act of 2002 concerning the amicable recovery of consumer debts. Indirectly, Article 83 of Book 6 of the Code of Economic Law also plays an important role, since it contains some specific rules on the compensation that can be asked from consumers, at least if the creditor is a trader and the debtor is a consumer. In the near future, probably, the legal framework will be extended. In addition to the rules on the amicable recovery of consumer debts, which will be changed quite a bit, and the existing rules on unfair contract terms in Book 6 of the Code of Economic Law, specific legislation on the payment of debts will apply. These rules will, amongst others, limit the compensation that can be charged from consumers. They will introduce a minimum term of payment and a reminder of payment free of charge. The date of entry into force of this new piece of legislation will still have to be determined, but most likely it will be somewhere in the beginning of 2021 before this enters into force. Now, let's first have a look at the existing legislation very briefly. The law on the amicable recovery of debts contains, first of all, certain rules of conduct which have to be taken into account by every person who is recovering debts amicably. If the person recovering the debt is someone who is acting within a professional activity, as is the case for a recovery agency, then some specific and additional rules apply. For example, the procedure has to start with a notice of default in writing, which is directed to the consumer. Once this notice of default has been sent to the consumer, a period of 15 days starts running, within which no further steps can be taken in order to recover the debt from the consumer. Once the period of 15 days has elapsed, well, new measures can be taken, including, for example, home visit. But if one opts for a home visit, some specific rules will apply. First of all, the consumer will have to be informed about the fact that the home visit can be stopped at all times, and then it can be refused by the consumer. Further, the law contains some limitations on the amounts that can be collected. Only amounts which have been foreseen by the contract, which have been determined by the contract, or which are determined by law, can be collected amicably. Now, if a law contains some obligations for certain parties, it is also very interesting to look at the remedies or sanctions that apply in case these obligations are not met. First of all, if an amount would be collected which was not due, the person collecting the amount will have to reimburse the amount. This is a first civil remedy which is incorporated in the Act of 2002. It is not a very strong remedy. However, the Act contains a stronger civil remedy in case other rules have not been met by a person recovering consumer debts within his professional activity. For example, if there is not started with a notice of default in writing, or the waiting period of 15 calendar days is not being respected, well, in a case like that, the consumer who has paid the debt can recover that payment from the agency that violated the law. Moreover, the consumer will be presumed to have paid the original creditor, which basically means that the consumer will no longer have to pay his debt. This might, of course, result in severe losses for the agency recovering the debt, because that agency will probably have to compensate the creditor for this. So there are some interesting sanctions which consumers can invoke. However, most consumers are, of course, not aware about these sanctions. So the chance that they actually try to invoke them is rather limited. However, the law does not only contain civil remedies, it also contains some administrative sanctions that could be imposed by the economic inspection. As I have already indicated, there is not only the Act of 2002, there is also Book 6 of the Code of Economic Law. And there are a few principles that are interesting. First of all, there is the transparency principle. The transparency principle implies that contractual terms have to be clear and comprehensible, which means, according to the European Court of Justice, that consumers should have the possibility to understand the contractual term. They must be able to understand the legal and economic consequences of any contractual provision. Even more important are the rules on unfair contract terms, which are incorporated in Article 83 of Book 6 of the Code of Economic Law. Because these rules, Article 83, they blacklist certain types of clauses, which means that certain types of clauses cannot be incorporated into the contract. And the first important principle that is incorporated in Article 83 with regard to compensation clauses is the principle of reciprocity and equivalence. The principle of reciprocity basically means that when in a contract, it is determined that in case a consumer defaults on his contractual obligations, the company is entitled to a compensation, that in such a case, the consumer should also be entitled to a compensation in case the trader does not fulfill his contractual obligations. Moreover, these compensations have to be equivalent. This does not mean that they have to be identical. No, they have to be of the same order, taking into account the potential damages that the other party suffers if the other one defaults on his contractual obligation. Now, in recent case law, it is most of the times accepted that the principle of equivalence is not met when, on the one hand, the trader, the creditor, is entitled to a fixed compensation, and on the other hand, the consumer only is entitled to a compensation on the basis of the principles of general contract law. This is not considered equivalent because of the fact that the burden of proof which is imposed on the consumer is much higher, where the creditor, the trader, would not have to prove the extent of the damage suffered. The consumer would if he has to base himself on the principles of contract law. And that is why that in many cases it is considered not to be equivalent. This principle of reciprocity and equivalence is very important. It is also very difficult for creditors to incorporate it in the contractual terms and conditions. And it is important to emphasize that it will remain important after the changes that will be made to the rules on the payment of debts. Second principle, which is embedded in Article 83 with regard to compensation clauses, is the principle of proportionality, which basically means that the amount of the compensation which is determined in the contractual terms and conditions may not be clearly higher than the damage that was foreseeable at the time of conclusion of the contract. In this context, it is worth mentioning the case law of the European Court of Justice, which stresses that when determining the proportionality of a compensation clause, one has to take into account the cumulative effect of all compensations that are determined by contract. Now, if the principles of reciprocity, equivalence, proportionality are not met, the compensation clause will be null and void. And this sanction is a very strict one because when interpreting and applying this sanction, we will have to take into account the case law of the European Court of Justice. And the European Court of Justice has stressed on several occasions that nullity of a contractual terms means that the consumer cannot be bound by that term, which basically means that the term simply has to be deleted from the contract. Deleting from the contract, that means that the term cannot be revised, that it cannot be reduced. This is very important, and there's a very big difference with the rules that exist for the moment in Belgian civil law principles in Article 1231 of the Civil Code. Moreover, the European Court of Justice has stressed that when a compensation clause is null and void, the trader cannot invoke the general principles of law in order to receive a compensation, which basically means that if a compensation clause is considered null and void, the trader cannot get any compensation for the fact that the consumer did not pay on time. I must, however, admit that in Belgian courts, the last aspect of this jurisprudence of the European Court of Justice is not always strictly applied. Okay, now let's have a look on what could change in the future and what will probably change, taking into account the debate that is going on in Parliament. Several proposals have been submitted, but I will focus on one of them. The one is most likely to be admitted in the near future. If we look at the proposal, we can see that these rules will apply to debts which are collected from consumers by businesses. So the B2C scope of application which is already applied for the rules on unfair contract terms will simply also be applied in this new piece of legislation. However, I must add that at this point there is still an amendment which is being debated in order to exclude small and medium-sized enterprises from certain provisions of this law. The argument is that the small and medium enterprise would experience difficulties in order to deal with the administrative burden that would be imposed by the new law. Further, there is a risk that they might suffer themselves from liquidity problems if this law would apply to them. It is, of course, hard to predict whether or not this amendment will be accepted. The question, of course, arises whether an exclusion of small and medium enterprises is compatible with the principle of equality. Also, for consumers, it will be hard to distinguish whether their creditor is a small and medium enterprise or not. A second amendment which is worth mentioning is the exclusion from companies falling under specific legislation. If you look, for example, at the law today, you can see that there are already specific rules relating to the consequences of late payment for debts within relating to energy and telecom. So the question is, should these new rules also apply for these companies? There is an amendment to exclude them from the new legislation. Now, if we look at the content of this possible future legislation, then we can see that on the one hand, it creates some new obligations for creditors, and on the other hand, it would create some new obligations for professionals that are collecting consumer debts amicably. A first important innovation of the new law, of the future law, would be that it would limit the compensation that can be charged and therefore can be recovered amicably in case of late payment by a consumer. The basic principle would be that the costs that are charged to the consumer may never exceed the real costs of recovery. But this general principle has been made more specific by using caps, absolute limitations. And as you can see on the slide, the costs may never exceed a certain percentage of the debt, depending on the amount of the debt, and they will never be able to exceed 6,650 euro. It is explicitly mentioned that these costs include the costs of the amicable recovery of debts by a third party, implying that no additional costs can be charged from the consumer. Now, in addition to this compensation, it will also be possible to claim an interest for late payment. However, the interest for late payment will also be kept to the statutory rate of interest increased with a coefficient of 10%, implying, for example, for the moment that the maximum interest for late payment that could be charged from the consumer would be 1.925%. Higher compensations will only be possible or will only be possible for creditors when he goes to court. And they can not be recovered amicably. Now, the question is how to assess this new rule, this limitation, this cap on the compensations. Well, I think the main advantage of this rule is, of course, that it offers legal certainty. At the moment, Article 83.24, which contains the principle of proportionality, contains an open norm which might be hard to assess. Caps make life much easier. So I think if this enters into force, it is to be expected that Article 83.24, the principle of proportionality, will not play a very important role anymore. However, as I already indicated, the requirement of reciprocal and equivalent compensation remains. From a consumer point of view, the use of these caps is also interesting, but also some criticism is possible. As you can see, the amount of the compensation will be higher if the amount of the debt collected is higher, whereas the costs of recovery will in both cases probably be similar. A second important innovation in the future legislation relates to the fact that consumers who are not required to pay immediately will receive a period of 20 calendar days to pay after the day on which the payment request has been sent to them. This basically means that traders will have to decide whether they either require immediate payment for the consumer, either they entitle the consumer to a 20-day calendar period. However, it is important to stress that this rule containing a minimum 20 calendar day term is subject to two different exceptions. The first exception allows to reduce that term of 20 days to 8 calendar days when an invoice has to be made by the trader. A second exception makes it possible to agree otherwise on the term of payment in case a direct debit is being used for payment. In the context of e-commerce, it might be interesting to emphasize that, of course, this rule will not prevent companies from requiring the consumer to pay first before to actually deliver the goods. This remains possible. However, if they allow the consumer to pay afterwards, the payment term must at least be 20 days, at least in principle. Secondly, second change, if the consumer does not pay within that term which is agreed upon within the contract, a reminder of payment needs to be sent to the consumer. And this reminder of payment must be sent to the consumer either in writing, either on a durable medium. And very important is that the first reminder of payment needs to be free of charge, which means that no costs can be charged to the consumer, no interests are due by the consumer within that period, which is given to the consumer to pay according to the reminder of payment. And the additional period that the consumer must have must be at least 10 calendar days. So basically, this means that a reminder of payment has to be sent before the notice of default to which the Act of 2002 refers can be sent to the consumer. Now, if we look at the content of that reminder of payment, we can see that in the law, the content of that reminder of payment is determined explicitly. It has to contain certain information on the creditor, certain information on the debt, but it also has to inform the consumer that when he pays within that additional period of 10 days, there will be no additional costs. Also, the consumer must be warned that when he does not pay within that additional period of time, he will suffer certain consequences and he will have to pay certain compensations and the interest for late payment. Also, the consumer has to be informed, if applicable, that he can request for a payment plan, and also if he experiences any difficulties in paying his debts, he will have the possibility to contact an institution for debt mediation. Taking into account that period of 20 calendar days within which the consumer can pay, and taking into account the additional period of 10 days after the reminder of payment, consumers who do not pay immediately at the time of delivery will dispose of a term of 30 calendar days to pay their debts without incurring any costs. Whether consumers will actually anticipate on the reminder of payment being free of charge is hard to predict. And whether creditors will decide on requiring immediate payment instead of a period of time that they give the consumer for the moment, maybe 7 days, well, it is also hard to predict whether they will choose for immediate payment or a term of de facto 30 days. Another innovation, which is important and which would be integrated in the Act of 2002, is the fact that in certain cases, the amicable recovery has to be temporarily stopped, which means that, for example, an entity amicably recovering consumer debts will have to suspend taking further measures to recover the debt from the consumer. And this will be the case first when the debtor requests a payment plan. In such a situation, no further steps to recover the debt can be taken until the creditor has decided on the request of the consumer. Secondly, no further steps to recover the debt amicably can be taken when the debtor requests for debt mediation. In that scenario, one will have to wait until the decision on debt mediation is being taken, or at least a period of 3 months has expired. And then finally, no further steps for recovery can be taken when the debtor requests budget guidance. No further steps can be taken until a period until it has been decided on the budget guidance, or a period of 3 months has elapsed, or if the budget guidance is accepted, no payment plan has been made within a 3 months period. Finally, there would be introduced some additional rules on home visits. As I have already indicated, in the context of a home visit, consumers today have to be informed about the fact that they can always refuse and stop the home visit. Well, in the future, if the new rules are being accepted, it will also have to be explained to the consumer that the home visit takes place in the context of the amicable recovery of debt and not in the context of a judicial procedure. Further, the consumer will have to be informed on the possibility of receiving a payment plan if he experiences difficulties in reimbursing his debts. And finally, the consumer who has been experiencing some difficulties will have to be informed on the possibility of debt mediation. In conclusion, if the new law will be voted in Parliament, it is clear that there will be new rules limiting the compensations that can be collected. These rules will have an impact on the point in time where the amicable recovery of debt can start, and they will make it possible for consumers to suspend the process of the amicable recovery of debt. These new rules, however, will have no impact on the judicial recovery of debt. Thank you very much for your attention, and I give the floor to Christoph.
Thanks, Professor Steenhout, for this clear explanation on the future legislation in amicable collection, which will have a huge impact on our industry and the collection processes of our customers. So, dear attendees, I want to thank you very much for excuse me. Yes, there we go. So I want to thank you very much for participating in this first session of the Intrum Academy. It's a start for us. It's a new normal also for us. So many thanks for participating in this session, and also many thanks for your questions. We saw some more questions popping up in the second half. Thanks a lot for that. Of course, I want to thank Professor Steenhout for his clear explanation about this sensitive topic, and also Davy Parmentier, who heard yesterday that he had to do this presentation. So thanks a lot for that, Davy. That's what dedication is all about. Wonderful. I also want to thank the team who made this possible. It's our first webinar. It's the first time we use the tool. I want to thank Nicola, Evelyn, Guy, Carlene, Alexander for answering the questions. Without the help of this wonderful team, this would never been possible. So there will be a follow-up. Tomorrow we will send you the presentation and the ECPR survey. But watch certainly your email for the invitation of the second seminar of the Intrum Academy, who probably will also be online in the form of a webinar. We are open for suggestions as to the subjects you want us to treat. So if you have any good ideas or challenges you have to cope with, just send us an email or contact your account manager, and we will be happy to tackle those subjects during the next session of the Intrum Academy.
Hi, Christophe.
Yes, Alexander.
I have received a question that seems interesting enough to share with everybody.
Yes.
It goes as follows: what's the minimum period for the amicable recovery? At what time can you switch to a legal recovery?
All right, I have Professor Steenert here with me, but he doesn't have the headset on. So I will ask him and see whether he can put on the headset and answer the question. It's a very valid question indeed, Alexander. So Professor Steenert, can you hear us?
Yes, I can hear you. So if you can repeat the question, then I can hear it.
Alexander, yes. Go ahead.
Yes, so the question is as follows: what's the minimum period for the amicable recovery? And at what time can you switch to a legal recovery phase?
Well, I think there is no limitation on that. So you have, of course, you have the term of payment which the consumer enjoys. Once that term of payment has been elapsed, then there is a obligation to have that reminder of payment with a minimum term of 10 calendar days. And after that, it is up to the creditor to choose which path he wants to take, either the amicable recovery, and that has to start then with a notice of default in writing, and then you have another period of 15 days during which no further steps can be taken, which is the same as what happens right now in the Act of 2002. But once the minimum period of 10 days after that reminder of payment has elapsed, the creditor can also decide to start the judicial procedure and to go to court.
All right, thanks a lot for this answer, Professor Steenert. Alexander, do you see any other questions which we can touch upon?
No, that was the only question I have.
All right, thanks a lot, Alexander. So thanks again to all attendees. Hereby we want to end this first session. I hope to see you all in the second session of the Intrum Academy. Have a good day to you all. Bye-bye.